Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? I was reading an article about Bitcoin halving, and it got me to thinking. If we handle our money supply the same way Bitcoin does their halving, I think our money would hold a lot more value, seriously. So Satomi, who is a creator of Bitcoin, the method that he uses to make sure that the supply stays low and that the cryptocurrency holds its value, it's actually pretty genius. Now, we're still yet to see what happens once the mining is done and how long Bitcoin will continue to hold its value after that. We have not seen how Bitcoin performs in a major market crash. We saw what happened in 2020 when it dropped just like everything else. So is it a true store of value? Well, it rebounded pretty good and went on to get record highs. In reading this article, I'm going to go over it with you. And then we should think about maybe that's what we should do with our own money supply. You let me know what you think. Before we get started, if you could do me a favor and just hit the thumbs up button, the like button that is. This helps us get past the YouTube algorithms. And if you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. A reminder to everybody that I am not a financial advisor, I'm not a lawyer, nor an accountant. All the information that I share with you is of my own opinion.
Hey, look, I want to talk about this Amber Lolly product again. Whenever something good comes along, I do want to talk about this. My neck, I had a kick in my neck from hell, and the pain was, it gets to the point where you get headaches. So I just grabbed the cream and I rubbed that crap on the back of my neck. After a while, you don't even realize that the pain is gone. You're just going, and how we are several hours later, and I'm still, there's no pain. And it works really quick. I like that. So joint pain and muscles, sore muscles, nice. And then here's the thing about me. I get offered all the time. People want to come on, they want to be sponsors, they want to be this. My thing is, if I don't use your product, I'm not interested. You know, I can sell out everything and make a ton of money, but no, you know, my subscribers to me are very important. But this product here, absolutely, I'm going to endorse this. I like it a lot. AmberLolly.com.
Hey folks, just a quick reminder that back in 2008 and 9, a lot of people lost all of their retirement savings in their 401ks and IRAs because they did not own gold and silver. Yeah, that's right. Gold and silver protects you from a market crash. So do yourself a favor, protect your retirement by purchasing gold and silver. You can go to moneymetals.com, reach out to them, and they will help you set yourself up to protect you and your family from having to start all over from scratch. If you're a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and they will send along with your order a free half ounce of silver. So folks, do yourself a favor, head on over to moneymetals.com and protect you and your family from a market crash, as well as inflation. So head on over to moneymetals.com and buy gold and silver. That's right, you could personally own it and have it. And keep in mind, if you spend more than $100 on your first purchase, use promo code Pimpy, P-I-M-P-Y, and you will get a free half ounce of silver. For those of you looking for my address, there it is right here. You guys know I have this alternative website. I encourage you guys to go check it out, because over here we do have videos that I cannot play on YouTube and videos that have been banned from YouTube. All proceeds go to finding life's purpose. Be careful from people trying to scam you, posing as me. Whenever I reply to your comment, there will be a black circle or a gray circle around my name. If there is no circle or shade around my name, then it's not me. I will not be sending you to WhatsApp or Telegram or Telegraph or anything like that asking you for money. From time to time, I will use material that is considered copywritten. I am just posting this to let you know that I am exercising my fair use rights. Okay, yesterday we had a fire sale going on, especially in the stock market. Dow was still down 120 points. Started to rebound slightly and went right back into the red. S&P is in the green, NASDAQ is in the green, Russell's in the green. Gold and silver taking a major hit, which is, well, I would say not the normal reaction to a stock market that appears to be crashing. So what do you say we artificially pump up the stock market to keep it from crashing any more than it is? Turn around and drop the gold and silver price, buy it up as much as possible, and then let the market crash. It seems to be the gameplay. Silver was above $23. Now look at us at $22.12. It's down $1.05. Okay. Gold's down $37.40. Yeah, just don't buy it. This is a good time to buy gold and silver. It's on sale. You can almost say the same thing about cryptos. Look at this. Bitcoin at 43,400, down another 2,489. If you look at the 52-week average over here, it is dropped below the halfway mark. Ethereum's at 3,448. Solana's at $154. XRP, our New World Order coin, is down to 77, almost 78 cents. Polkadot's at $27.24. Dogecoin's at 16 cents. And Shiba, as usual, doesn't move very much, man. It's at 4031. Teetering around that same place, no matter what the heck is going on with the other ones. Talk about a stable coin, that's for sure. Satoma is at 7076. It's down about 1%. Not bad. We've seen a huge drop yesterday because everybody was selling off to get their profits from after a huge gain, but it starts to rebound. You can see right here, it's climbing back up. It'll go back up. So what was happening yesterday when we've seen a lot of red going on? People seen the writing on the wall. They got a hold of the Federal Reserve minutes. We know the tapering is getting ready to start, as well as a hike in interest rates. I'm going to show you what happened the last time they tried to raise the interest rates. It says Dow slides to turn negative year to date as Fed prompt sell-off continues. Stocks were mixed Thursday morning after equities did an about face in previous session, plummeting from record highs as investors mauled the likelihood of a tighter Federal Reserve policy and interest rate hikes as soon as March. Yeah, we'll see. Because as soon as those rates start to go up, you're going to see everything take a hit. Look over here to the side. You can see what they were doing. All three down. The Dow extended declines to turn negative year to date, while S&P 500 and NASDAQ hover around the flat line. Wednesday marked a bearish day for markets, spurred by the release of minutes from the Federal Open Market Committee meeting that was held on December the 15th. Deflate concerns from policymakers about worsening inflation and signal more aggressive intervention by the central banks. Of course, there's going to be more inflation. They're already lying to you about the number as it is. Not to mention, they're using this whole RONA thing as an excuse to keep the country on lockdown. They're paying more people to stay at home than to go to work. Ships with our supplies off the coast, backlogged. Still think this isn't planned? If you want to fix all this, all you have to do is just open everything up. Send people back to work. Stop giving them more money, stay at home instead of going to work. Get the shipping containers in here, start stocking up things. But that's not what they want to do. They need you so desperate that you will accept universal basic income, in which the government then controls your butt. Said markets need time to settle. We've got earnings seasons starting in a couple of weeks. Yeah, earning. It's that time of the year. Holidays are over. That's when you start to see things really take off. This person went on to say, I think that's when people started to get a better grasp, or at least look at these markets through a more rational lens. A more what? A more rational lens. We already see it with the rational lens, and that is what? It's a fake, artificial market. Remember, it's not people that control it anymore. No. It's computer algorithms that know exactly what to do and what to put up in front of people to keep them from panicking. When the markets drop this low, what do? Poof. When it does this, what do? Poof. It's all fake. It's all facade. We know gold and silver is truly not that cheap. We know the stock market isn't worth a crap. So there was a huge sell-off yesterday. It started to drop, caused a little bit of a panic. But this isn't just happening here. There's problems everywhere. I spoke about this before too. The lira hits the deck as Turkey prepares for a crypto showdown. Yeah, you know what they're doing over there? The citizens are dropping the dollar and moving over to cryptocurrencies. They believe cryptocurrencies are a safe haven. I'm not that convinced yet. I still have cryptos, yes. But almost all my money is in gold and silver. I'm out of the system. Said a year of economic turbulence has sunk the Turkish lira to new lows. And retail investors across Turkey are racing into cryptocurrencies in a desperate race to protect their savings from drastic devaluation. But now you can see, what good is it? Cryptocurrencies are dropping as well. They all go in the same direction. Gold and silver drop slightly and then rebound big time and then continue to grow at a rapid pace. where it takes cryptocurrencies as well as the stock market months and even years to rebound back to their normal levels. Erdogan, that's the president of Turkey, has revealed that cryptocurrency bill is prepared and ready to be presented to the Grand National Assembly, Turkey's legislative chamber. And some analysts have been quick to allege that it is partially in response to significant capital outflows into digital assets such as Tether and Bitcoin. So there's a small part of me that goes, what if this is part of the plan? That's me all the time. Everything to me is a conspiracy, as you can tell. But what happens if that's the plan all along? To push everything into cryptos and move you from cryptos into the central bank digital currency. But the crux of the issue rests on the instability of the lira, bleeding out 40% of its value this year. Ouch, man. Yikes. 40% loss in purchasing power. I told you, countries everywhere, their currencies are being devalued. This is how they push you from the old system into the new system. Something halted only for a fleeting moment as a promised currency support package earlier in December. The lira's perilous downturn can be directly attributed to a combination of continued cuts to interest in the face of uncurtailed COVID-fueled inflation rates, a knife in the back of the economy recovering from a 2018 debt crisis. Erdogan's plan involves the Turkish rate indexing lira deposits to protect them against future declines relative to the hard currency via state-backed reserves. The hope is to reassure citizens and stem the flow of capital fleeing the national currency. So the move briefly halted the downside pressure of the lira as markets felt reinvigorated by the increase of citizens' purchasing power. It went up. You can see here it went down, and then it went up, and then came back down. However, the fickle reality of a 30% month-on-month inflation rate, 30% inflation rate. We're around 13%. And look how things are. That's what we have to look forward to as our dollar continues to drop in value. Alongside with drastic imaging of physical debt requiring to sustain the deposit protection scheme, quickly smacked the lira back down to new all-time lows. Look at that. Sustain the deposit protection scheme. Deposits protections, as in when people do a bank run, and then you have a bank holiday, and then they do a bail-in. I'm telling you, it's coming, man. It is coming. You can see here, governments are seeing people running over to cryptocurrencies. So if cryptocurrencies go the way we all hope they do, and they're not interfered with, to me, that's a smart move. You would move your currency over there because the markets are dropping, the inflation is killing their dollars, and you would move your money over to where it has less damage to your purchasing power. So I'll show you something. So this is the S&P 500. Back when we had to crash in 2009, it didn't just happen overnight. It started in 2007. So it just gradually kept going down, Where this big steep drop-off is, you're looking at September the 15th. It looks like it's almost straight down, but pay attention. This is September the 15th, 2008. It's here on October 6, 2008. So it looks like a straight drop, but it's not. That's over a couple months. And then it continues all the way into about right here, which is in March of 2009. See how long it takes for it to drop? It looks on this particular graph like a straight drop, but that's not. I mean, technically the drop starts here. So this is October when it starts to do its drop. It's at its highest peak, October 2007. It keeps dropping until you hit about, around February, March of 2009 before it goes up. So over a 2-year span, it just kept gradually going down. And how that hurts you is because you keep thinking it's going to recover. This is what happens. It's up, it's down. It goes up again, and you're like, oh, it'll recover. And nope, it goes down. It's up again. You're like, no, it'll recover. It goes down. Then you see this big drop, and you're like, oh, maybe I should sell off. Nope, it starts to recover, and you're like, okay, it's recovering. Down, up, down. Then you see this recovering, so you leave your money in there, and with the idea, look, it goes up and down, up and down. It's volatile. I don't need to touch my money. You get one last heart attack, drops all the way down to here. You're like, did you see a rebound? Down, up, and then boom. Because people just look, it only took a couple months. Because people are thinking it'll rebound, but it doesn't. That's in 2009. It started in 2007. So here in September of 2018, the Feds raised the interest rates. And look, it dropped. That's when Trump kept complaining about why they, under my presidency, why they were raising the interest rates so fast. He kept complaining about it, and the market started to drop in response to the interest rates hike. Of course, they stopped and then lowered the interest rates, and the market recovered. You see here in February or so of 2020, this big drop is due to the shutdown. That's what this is. You look at the 5-day, here we go again. S&P's up here, starts to go down. Had the talk of interest rates dropping. Starts to recover a little bit, and then what happens? We get this thing here yesterday, January the 5th. Look at this. Just at the mere mention of tapering, possible interest rates hiking in March. Look at this. In one day. NASDAQ, for those of you wondering what this huge spike is, well, this is the dot-com bubble. So this when the NASDAQ took off like a bat out of hell and then just totally collapsed. So same thing. You can see here, October 2007, market starts to go down. The huge drop. We get over here. Same thing with NASDAQ. What happened with the other markets in 2007, 8, and 9. Same thing here in 2018. Interest rates are hiking like crazy. The market starts to crash. Trump was complaining about it. They cut the interest rates. It started to recover. Start getting over here in 2020. We have the crash because of the coronavirus. And looky here. This one started NASDAQ on the 4th. Get over here on the 5th, start drop. You can see the same patterns are starting to happen as would happen in 2018. This is at the mere mention of interest rates hike. And here you have the Dow Jones, 2007, October, drops all the way down. This is during the too big to fail banks, that whole BS. Again, 2018, here we are. The market starts to drop because interest rates are going up too quick. Trump complains. They cut the interest rates. We get over here. Coronavirus drops again. Now here we are. On the 4th, the Dow starts to recover. Get over here around the 5th. We hear about the interest rates and the tapering, and bam. This is just at the mention of when interest rates are going to happen. That's it. And what caused that little drop off yesterday? Right here. Again, it says stocks were mixed Thursday morning after equities did an about face in the previous session, plummeting from a record high as investors mauled the likelihood of a tighter Federal Reserve policy and interest rate hikes as soon as March. Just at the mere mention of interest rate hikes, you've seen it drop. Back to the why Satomi's idea of what he did with Bitcoin would help us. Let's read this article. What would happen during the next Bitcoin halving? If we look at how the Bitcoin halving process works, it makes you really think that this might be something we should consider when dealing with our own minted money. To simply put, Bitcoin halving is the process of halving the rewards of mining Bitcoin after each set of 210,000 blocks are mined. By reducing the rewards of the mining Bitcoin as more blocks are mined, a Bitcoin halving limits the supply of new coins, so price can rise if demand remains strong. In other words, by reducing the amount of new coins being put into circulation, that would obviously make the coins that are in circulation more valuable because the amount that's put into circulation is reduced, making them more scarce. Think supply and demand. In other words, the Bitcoin's way of using the synthetic form of inflation that halves every 4 years until all Bitcoin is released and into circulation. Now you see, this works as long as there's mining involved. What I'm going to be curious about is if it keeps its value once all the coins are out. Let's take a look at something. So this goes through at least to 2012, but you get an idea of what's happening. just to show you how volatile this market is. Here's the first one. It goes from 17 cents up to $31.50. That's pretty big growth. But all of a sudden it drops back down to $2.01. Ouch. If you held on to it, then you can see real quickly, it goes from, what is this, $2.01 over the next couple years after the halving, you're back up to $1,178. Drops all the way back down to 163. Do you see this pattern? That's why you can't panic when you see a sell-off. That's what's the problem with speculators. They don't do the research and they don't see these patterns. Now, again, cryptocurrencies, there's a lot of volatility, and if you have a bad heart, you shouldn't invest in it. So I came over here, and this is much more extensive. This goes all the way out to where we are now, which is 2021. You can see the graph. There's a lot of highs, sell-off and bearish, up highs, sell-off and bearish, accumulation, starts to go back up, a bunch of highs, sell-off, accumulation. It's the same pattern, you guys. This is where we are now. So if you know how to see these graphs, and you know when they peak, well, maybe you could get lucky and time it. Maybe. Sell when it's high, hold on to your money. Put it into stablecoin and let it sit there till Bitcoin's done bottoming out. Then what do? Pump all your money right back into Bitcoin. This way, then now you have more than when you started. Something similar to equate that to is whenever we see the ratio in gold and silver. Last July, was it last July or the July before? We seen 124 ounces for every 1 ounce of gold. I was like, oh, hell no. Take 10 ounces of gold, trade it for 1,240 ounces of silver, and then in less than 3 months, the ratio dropped down to, was it 64 to 1? Well, then if I take that same amount of silver, 1,240 ounces, and trade it in for gold, I now have 18 ounces of gold. So within 3 months or so, I made 8 ounces of gold just watching the ratios. The point I'm trying to make is Bitcoin's halving process, even when there's inflation, finds a way to manage inflation by reducing the amount of coins in circulation. What we do is the opposite. We pump more money into the system. That just devalues the money even more. That's why I thought the halving process of Bitcoin is interesting and something we should consider when managing our own dollars. To help you understand halving, let's explain how the coin is acquired. Bitcoin mining is the process where miners unearth Bitcoin through digging into Bitcoin's digital cave with a specialized mining equipment as their virtual package. Bitcoin miners have to solve HempWorx highly complex mathematical equations to complete the blocks that are added to the Bitcoin blockchain. A block refers to a file that stores and keeps 1 megabyte worth of Bitcoin transactions. As more and more transactions are verified, Bitcoin's network also increases in size. After successfully verifying transactions, which usually take 10 minutes, miners will receive a Bitcoin as a reward. Now, in the process called Bitcoin halving, the rewards earned by miners fall by half after a set of 210,000 blocks are mined, or roughly every 4 years. So before, let's just say, I'm just going to use this because I don't know the right numbers, so calm down, people. So before, let's say, when you first started mining back in the days, when mining first started, you were getting a full Bitcoin every 10 minutes. I'm just using it as an example. You're happy, you're mining, you got your Bitcoin, it's coming to you. Then all of a sudden the first halving takes place. So instead of a full Bitcoin, you now get a half Bitcoin. No problem. You get a half Bitcoin every 10 minutes. And you're just mining along. Then the next halving comes. And instead of giving a half Bitcoin for every 10 minutes, you now get a quarter. Do you see how that works? Basically what you're doing is reducing or drastically slowing down the amount of Bitcoins that go into circulation, because the miners are getting the coins that go into circulation. By reducing the amount of coins that go into circulation, it slows down the amount of money in circulation, making it more scarce and helping the Bitcoin keep its value. We do see volatility, but I showed you guys in the graph. Despite the volatility, it has continued to increase in value going all the way back since 2012. So the creator of Bitcoin, Satoshi Nakamoto, set an artificial limit on the number of Bitcoin that can be produced. The limit is 21 million Bitcoin. And that limit should be reached somewhere around 2040. At this point, the miners will no longer be rewarded in Bitcoin for their efforts. Instead, rewards will likely take in the form of transaction fees, in much the same way a credit card company currently charges for transactions. So they're guessing by 2040, the last of the coins will be mined. All 21 million coins will be in circulation. That's it, period. There are no more Bitcoins. If you think about the amount of money we mint every year, there's a ridiculous amount of dollars out there in circulation. They artificially kept the markets floating. They try to artificially save this economy. People say, oh, this is capitalism at its worst. No, no, no. This isn't capitalism. Because you see what capitalism does, it doesn't bail out banks. It doesn't bail out businesses. It lets them fail. And those people should learn from their failures, turn around and come back and rethink about what they did right and what they did wrong and build a better company. We don't do bailouts. True capitalism, a free-flowing capitalist market does not bail out companies or save them. It lets them fail. It's sink or swim, dog eat dog. This is manipulated capitalism. So the powers that be found a way to take money from the poor and continue to get rich themselves. The government and the banks are all part of it. If you think about what Satoshi is doing with Bitcoin, so when times are hard, I don't think pumping money into the system is a smart thing to do. Think supply and demand. Let those companies that mismanage their money, including our own government, fail. This way then the people can complain about the policies that they're making, going, hey, obviously you're not managing our money right. You're a failure. Our government has failed. Therefore, we need new people in there. But taking more money and making more money willy-nilly just to save your own asses because you want to stay in power is not the right choice. Limit the amount of money that's in circulation. This way, then, what happens is people tighten their belts and they rethink about frivolous spending and they think smartly about what to do with their money. So would our government. I like the idea behind what Satoshi was doing with Bitcoin. There's some parts of this I think that should be implemented on how we manage our money. Now you're going to get these experts going, oh yeah, but if we do this and do that, well, here's the thing. Again, I don't want to spend $6 million on studying the dancing habits of lesbians on ecstasy. Yeah, I keep bringing that up as a joke because it's real. As a matter of fact, the new papers came out here, and one of the things that we did was spend $1.3 million to send Korean kids on vacations. School kids. Why the hell are we spending money helping other countries' kids go on vacation when our own damn kids are living homeless? Why are we tolerating that as a country? We send trillions of dollars around the world to help those other people out because we got it so good here. Well, who are you talking to? Who's got it so good? They use that money, they funnel it through fake ass organizations that are meant to help people and bring it right back into politics, and then the politicians and their friends get the money. This is something we should consider when we're dealing with our own money supply. Lowering the amount of money we put into circulation when things start to get tight. This way then what happens? Everybody stops spending frivolously. The problem with our economy, it is a debt-based economy. In other words, you have to be in debt in order for the economy to be successful. That's a backwards economy. Anyways, I just thought it was interesting. I wanted to show you when the markets are crashing every time we raise the interest rates. That's why you're starting to see a sell-off now. But also take a look at this Bitcoin halving method. There's something about this. Something about this that should be implemented into the way the Federal Reserve manages our money. First of all, they should be managing it at all. If our economy starts to crash, it makes our politicians look bad. That means they're not passing the right policies to protect us. Therefore, we remove them out of office. But since they want to look good and they want to save their asses and stay in politics because it's a career for them, this is what we get. Something needs to change. I think what this concept, this idea behind this Bitcoin halving, that process, I think would work successfully in our own economy. I'm curious to get an actual input. Anyways, I just thought this was interesting when I read this article. I was like, why don't we do something similar to that to our own money supply? Not increase it, but lower the amount that's in circulation. Think supply and demand, the dollars become more valuable because they become more scarce. Right now, the dollar has no value because we've got trillions and trillions of them out there. Anyways, I thought it was interesting. I wanted to bring it to your attention, get your input on this. You guys let me know what you think down in the comments. That's it for now, you guys. Hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I'll talk to you later. I'm out.